What is up, guys, and welcome to another edition of the Market Marauder Show, beating the market one trade at a time. Alright, so we're on episode 222. This episode, we're going to be talking about some news going on in the AI market, as well as the retail market and inflation. So first, let's start with some of the things going on in the market, some headlines that were made. So T-Mobile said that they're going to buy most of US Cellular in a $4.4 billion deal. So details of this acquisition, T-Mobile announced its plans to acquire most of U.S. Cellular, including stores, spectrum assets, and customers, in its $4.4 billion deal. The transaction involves cash and up to $2 billion of debt, with up to $100 million dependent on financial and operating metrics being met. This acquisition caused U.S. Cellular shares to rise more than 12%, while T-Mobile shares increased by around 1%. And so the direct competitors to T-Mobile currently in the market are Verizon, which is doing pretty good overall, and then you have AT&T. So this should be a good move for T-Mobile in general. T-Mobile will acquire approximately 30% of U.S. Cellular's wireless spectrum to improve rural coverage and connectivity for U.S. Cellular customers. U.S. Cellular will retain 70% of its spectrum and towers, leasing space on at least 2,100 additional towers at T-Mobile, and allowing T-Mobile to sign long-term leases on at least 2,015 U.S. cellular-owned towers. Strategic implications of this future plan are T-Mobile's recent acquisitions, including the 1.35 billion purchase of Mint Mobile and 26 billion merger with Sprint in 2020. So those are two big mergers that happened. So getting Mint Mobile, as well as having Sprint, kind of combining those two carriers together to make what is now the new T-Mobile. The companies expect the current deal to close by mid 2025, with US Cellular customers having the option to keep their current plans or switch to the T Mobile plans. And this acquisition aims to provide a stronger anchor tenant for US Cellular customers for at least 15 years post deal. So, overall, going to be looking at T Mobile to try to wrap up this week for some movement to see how this deal really impacts the cellular market. Next, we have Hess. So, Hess shareholders approve a $53 billion Chevron deal. So, shareholder approval and acquisition terms of this deal include Hess Corporation approving the $53 billion acquisition by Chevron, despite uncertainty surrounding the closing timeline due to ongoing disputes with ExxonMobil. Hess stock remained relatively unchanged following the approval. The merger is dependent on resolving attribution proceedings initiated by Exxon regarding Hess asset in Stabroek or Starbuck block, and Hess holds up to a 30% stake. Now, currently, there's a dispute going on with ExxonMobil and Hess. So, ExxonMobil claims right to refusal over Hess assets in Guyana under a joint operating agreement, leading to the arbitration filed by Exxon in March. If Exxon prevails, then the Chevron Hess deal will terminate. The Hess will remain independent, which it currently is. And Chevron and Hess are confident their position will be upheld in arbitration while Exxon seeks to confirm its rights and assets, the value of Hess Guyana's asset. And so the regulatory timing around this, the deal initially expected to close the first half of 2024. It's delayed due to arbitration with Exxon. Hess has required a ruling by a fourth quarter to potentially finalize the transaction soon after. The deal also under scrutiny by the FTC, or the Federal Trade Commission, with a review expected to conclude shortly. Institutional shareholder services expressed concerns about the lack of prompt disclosure of the arbitration risk to shareholders, while Glass Lewis recommended voting in favor due to merger strategic and financial merits. So overall, definitely going to be an interesting move for the oil and gas industry as this deal comes to a close. So next, we're going to talk about our sponsors, Duck River Coffee. So if you're tired of old coffee, it's not fresh, It's been on store shelves for God knows how long. And you're ready for some roast to order coffee, make sure you check out Duck River Coffee. Link will be below in the description. So next, let's talk about the AI markets. So first, one article that I came across is OpenAI board forms new safety and securities committee. So OpenAI, the founders or the company around ChatGPT, which majority of people use these days, has been kind of the big rally around the AI push and really shows what AI is capable of, is forming a safety and securities committee. Their board established a safety and securities committee chaired by Brett Taylor and members Adam D'Angelo, Nicole Seligman, and the CEO himself, Sam Altman. This committee will advise the board on critical safety and security decisions for OpenAI's projects and operations. So basically, they don't want the wrong information getting into the wrong hands. There have been like competitions that have gone on where people try to essentially hack ChatGPT to try to get it to do some nefarious prompts that would give information that people wouldn't want out into the public. And that's also helped to stress test the capabilities of ChatGPT. As you may not know or do know, there's a new version of ChatGPT that's out called GPT 4.0 or 4.0. And I think this will help to kind of guard the rails as far as AI is concerned. Immediate focus and evaluation period. The committee's first task is to evaluate and enhance OpenAI safety and security process over the next 90 days. At the end of this period, they will present their recommendations to full board, followed by a public update on the adopted recommendations. And so there's going to be inclusion of this policy. The committee includes OpenAI's key technical and policy experts, um, which will then go and consult additional safety and security concerns and have some more technical experts in the cybersecurity space that will help support their work. So next, we're going to talk about Elon Musk. So Elon Musk XAI firm is now valued or has a valuation around $24 billion. And so definitely very significant valuation, especially with everything that's going on in AI. I think it's a great timing to kind of raise money for an AI company such as this. The firm XAI raised $6 billion from investors, including Sequoia Capital, Anderson Horowitz, and Saudi Prince Alaouid bin Talal, increasing the valuation to 24 billion. This funding will be used to bring XAI's first product to market, build advanced infrastructure, and accelerate research and development of future technologies. So I think this is really good for the AI space um, as a whole. ChatGPT or its company OpenAI has kind of been the industry standard as far as AI is concerned, and this could be a potential rival to OpenAI, um, and definitely going to have some healthy competition as far as the prompts and the way people interact with AI as a whole. So XAI was founded by Elon Musk in July last year, positions itself as a potential competitor to OpenAI, the creator of ChatGPT. Uh, and Musk, a co-founder of OpenAI, left the company 6 years ago due to disagreements about its direction. And so XAI's new funding and development, such as AI-powered chatbot Grok, aims to challenge OpenAI's market position. And so there's some ongoing development that's going on with XAI. It's actively developing and improving its AI chatbot named Grok, and recruiting engineers and researchers in Palo Alto, San Francisco, and London. Despite the substantial investment in AI, the industry faces challenges, as highlighted by Google's recent issues with its AI generated search tool, which provided inaccurate information, and this underscores the complexities involved in bringing AI to market. So definitely some challenges. I know Google has struggled a little bit with trying to get their prompts kind of down packed, which kind of just helped promote more of OpenAI, and OpenAI has kind of just been running at full speed trying to get some more prompts available, having new updates to their program as well, and then really allowing users to kind of run wild with all the possibilities that AI can bring. As far as the corporate side of it as well, I think having more AI focused companies will help bring more money to market and then also have more technical solutions for companies to use as well as just regular consumers. Next, we're going to talk about Nvidia. So Nvidia was all the talk last week, still some of the talk this week. So Nvidia's dominance in the market position. So last week, with the $2.77 trillion valuation, is the third most valuable U.S. company. Initially known for gaming chips, Nvidia pivoted to the data center business and capitalized on the rise of generative AI, such as ChatGPT. Nvidia holds a near monopoly in AI chips with over 90% market share, largely due to proprietary CUDA or CUDA software stack, which outperforms competitors like AMD and Intel. And so, for its financial performance, that it came out with its earnings last week, reported its first quarter revenue of 26 billion, which was a 262% increase year over year, driven by strong demand for its Hooper GPU computing platform. The company expects second quarter revenue to hit new highs of 28 billion. Nvidia's GPU are in high demand for major cloud providers and data center startups with significant returns on investment for customers. And then, as far as future growth and innovation for NVIDIA, it's transitioning from its Hopper AI platform to the next generation Blackwell system, which promises significant performance improvements and cost efficiencies. Despite concerns about demanding slowdowns during the transition, NVIDIA expects continued strong demand, and the company is accelerating its product release cycle to an annual rhythm to maintain its competitive edge and meet evolving customer needs. So compared to AMD and Intel, I think Nvidia is kind of light years ahead. As far as the finance community is concerned, I think they look at Nvidia as like the leader. That doesn't mean that AMD and Intel don't have um, the ability to jump in. There will be some companies that will go with AMD and Intel, but I think as far as price per capability, I think NVIDIA really has the performance portion down packed, and I think that's why everybody in the industry is going with NVIDIA. Definitely would like to see AMD and Intel in the future come out with some different products, but I think everyone is looking at the spotlight for this next generation Blackwell system that's going to be coming out and debuted that is transitioning from its Hopper AI platform. So next let's talk about the retail market. So Abercrombie and Finch had an earnings this week. They had record-breaking financial performance. Abercrombie and Finch reported strongest first quarter in history, with a 22% increase in sales and profits nearly 7 times higher than the previous year. The company's earnings per share and revenue significantly exceeded Wall Street's expectations, leading to a 24% surge in its stock market price. The retailer expects to continue sales growth, raising its full year sales forecast to approximately 10%. So I think this is pretty good for Abercrombie and Finch as a clothing company in general to be able to surge 24% and increase its sales 22%, especially while people are moving from going to like malls. I know growing up myself, I used to go to the mall all the time and always see the Abercrombie and Finch store in the mall. It was definitely one of the places that people went to. That as well as Hot Topic was one of the places that everyone went to in the mall. But definitely seeing a company that has been around for so long continuing to grow is definitely nice to see with the current market that we're in. So the CEO, Fran Horowitz, highlighted the company's effective management of seasonal transition, relevant assortments, and compelling marketing, and the introduction of A&F Wedding Shop exceeded expectations, and the Hollister brand saw a 12% sales increase, reflecting improved traffic trends and inventory management. Abercrombie's focus on inclusivity and leveraging influencers for marketing has played a significant role in its recent success. So definitely the A&F wedding shop, as you see companies like David Bridal kind of go under, or some of the places where people used to go get wedding attire um, start to go down or go under. It's good to see them, kind of tap into that market as well. Also, already having a pretty strong brand themselves. And so, for international expansion and future growth, Abercrombie achieved substantial growth in the international markets, with sales up 19% in Europe and the Middle East and Africa, and 10% in the Asia Pacific region. The company continues to localize assortments, invest in marketing to drive brand awareness in key markets like UK, Germany, and China. And Abercrombie plans to build on its momentum by further developing the Hollister brand and expanding its product categories, aiming for sustained growth in the upcoming quarters. So next, I want to talk about Walgreens. So this is kind of a shift into inflation, but Walgreens says that they're going to be cutting prices amid the consumer spending fatigue. Walmart announced significant price reductions on over 1,300 items as part of the Summer Savings Initiative. This move aims to support consumers struggling with elevated inflation rates and ongoing financial strain. The company has been lowering prices since October 2023, addressing a challenging retail environment highlighted by their March earnings report. So, some examples of things that they're reducing are like the 80 count men's women's gummy vitamins, which are now $11.99, which were originally $13.49. You also have things such as the Clean and Clear foam facial cleanser, which was $7.99, is now $6.99. And then some other items like hand cream, which was $7.29 and is now $5.99. So definitely some of those price cuts will help overall. I don't know if it will directly drive traffic in, but Walgreens being sort of the place where people come to get those sort of items, I think it will help grow or gain customers' trust. They also do have a rewards program where they put a lot of things on sale, so hopefully that will help get more people into the store. So as far as the broader retail trends um, compared to Walgreens, so Walgreens um, announcement aligns with other retailers like Target and Walmart, who are also reducing prices to cater to price sensitive customers. The U.S. economy recovery shows a K shaped pattern, with wealthier Americans maintaining spending levels while lower income consumers cut back. And this trend reflects in customer confidence reports and commentary from business leaders highlighting the financial pressure on lower income groups. So definitely people are, starting to budget or decreasing their budget on certain items and increasing on others. I know food prices have been one of the things that have gone up significantly due to the inflation that's going on. So it's nice to see some of these big box retailers try to help customers out and get more people into the door. So next, all eyes on inflation. Let's talk about inflation. So one of the things about inflation is a comment that was made by one of the executives at McDonald's. So McDonald's executive says prices are about 40% higher than they were in 2019. And so Joe Erlinger, who was the president of McDonald's USA, addressed the claims about the company's price hikes, clarifying that the average price of a menu item has increased about 40% since 2019, contrary to social media assertion of over 100%. He highlighted that the price of a Big Mac meal has risen 27% to $9.29, while a 10-piece McNugget meal and medium fries have seen similar increases. So, I think this is not just for McDonald's. This is all fast food chains in general. The prices have uh, gone up significantly, especially since a lot of this inflation has gone out. Especially seeing people going to eat at home more instead of going to eat out, or eating out less, or just choosing different places to eat. instead of sitting down and eating at a restaurant, going to places like McDonald's, or people who are going to McDonald's probably just eating at home for some of the meals and then eating out less. So the reasons for the price hike, the president said, arbitrary attributed to the price increase to higher input costs, so including crew salaries, the cost of goods. Emphasized McDonald's commitment to maintaining value and affordability for its customers despite the rising cost and economic challenges faced by customers. And so, new value promotions and industry impact. In response to the perception of rising prices, McDonald's will introduce the $5 value meal for a month starting June 25th, including McChicken and McDouble chicken nuggets, fries, and a drink. Analysts believe this promotion is aimed for improving value perception rather than driving profits, and may impact sales and margins. Franchisees expect or express concern about the sustainability of such discounts, with additional financial support from the company. So it's kind of a double edged sword at this point. You do have franchisees because they run off a franchise model where the people who kind of run the McDonald's facility where they're located still need to make a profit. They still need to be able to pay their employees, and then have those margins to where they can buy supplies. So having kind of a corporate initiative to have lower priced items could hurt them. But then if the company turns around and then gives the franchisees more money, it's kind of like you didn't really save any money because you're spending more money on the franchisees instead of saving more money. So I think overall there's probably going to be some medium. There may be some items that go on sale, potentially permanently, and then there may be items that are made that are brand new, that will be, permanently lower priced items that will be on the menu, and then there'll be the regular priced items. So I think there's kind of a yin and yang between the two, a balancing act in this world for the corporate entities, as well as, you know, alluding back to the Walgreens section where they're lowering prices on select certain items that they see customers like. So next, let's look at inflation. So what to expect on the upcoming inflation report. So impact of inflation data on interest rates. The upcoming PCE, or Personal Consumption Expenditures report, is expected to be shown a 0.3% rise in consumer prices for April, with a year over year gain of 2.7%. This data could ease fears of reaccelerating inflation. Core inflation, excluding food and energy, is predicted to rise by 0.2%, down from 0.3% in March. This is significant for the Federal Reserve, which closely monitors the core inflation to guide monetary policy and interest rate decisions. So the Federal Reserve rate cut timing. So since last July, the Fed has maintained its key interest rate um, at its highest since 2001 to combat inflation, aiming to see price increases slow to a 2% annual rate before cutting rates. And while the PCE report matching expectations could set the stage for some rate cuts starting in December, the Fed would need several more months of favorable inflation data in order to do that. Analysts suggest that the significant improvement in inflation and some softening in labor market or growth data are required for early cuts. And so, what the market expects to be more optimistic, with a 55% chance of rate cuts by November, according to CME's group FedWatch tool. The PCE report will also provide insight into consumer spending and income, which forecast expecting a 0.3% growth in personal income and a 0.4% increase in spending for April, both showing a slowdown compared to March. And these indicators will influence interest rates decisions and reflect with financial health of the U.S. household. So PCE is a good number to look at. It kind of shows how the economy is doing as a whole, and then also kind of shows are the things that the big corporations like Walmart and Walgreens, and some of these other retailers doing, helping with the inflation as well, because ultimately they want the Fed to cut rates so that the market can start to go back up, and inflation won't be as high. So next, the last section, we're going to talk about some stocks to watch. So these are stocks that I'll be watching as the week comes to a close. First one is going to be Nvidia, which we talked about earlier. Uh, Current price that I had Nvidia at was at $1,148.25. If we look at the charts, we can see that it is above its moving average 10, 20, and 30. Moving average 30 being around $1,126.16 at the time of recording this. And its moving average 20 is at $1,141.30. And moving average 10 is around $1,145.73. So I think ultimately, what the market is saying on the right hand side is that the low price is around $870, average price is around $1,190, and the high target price is around $1,400. So a price I'll be looking at, in my personal opinion, would be between the 1,190 price and the 870 price, um, being the low. I think the hype is kind of over with Nvidia. Not saying that it's not a good company. I think just overall, a lot of people kind of understand what AI is. They understand the market. Um, it's going to be hard to beat those numbers that they did this year with 26 billion, raising it to 28 billion. They do have a lot of institutional investors kind of rallying around it. If you look at CNBC before earnings, it was like talked about every single day, Nvidia's earnings. But I think kind of the hype is kind of weighed off. I think until the actual um, deliveries of the Blackwell start happening, I think it may go back up back then, and kind of seeing how that technology is being working or implemented. I think it's going to be kind of a sideways trend for them. So I think it'll probably, you know, be somewhere in between 1,190 and then jump back up to in between 1,400 and 1,190. Next, we have Apple. So Apple definitely um, kind of on the move sideways, in my opinion. Their current price was at $190.29 at the time of recording this. So they were down. I would consider them bearish because their price was below the moving average 10, 20, and 30. Moving average 10 was at 191.44. MA20 was 191.08, and MA30 was 191.03. So they ended at 190.29 overall. I don't think that's bad for Apple. Still pretty high in my personal opinion. Once they start, getting past the threshold of 186.63, being low, I think that's kind of um, a concern. But that would probably be a buy point for a lot of people because Apple overall is a good stock, a good long term hold. And so, what the market is estimating as a high target price of $275 with an average price of 207.72 and a low price of 164. So I think 164, in my opinion, is a pretty low target price. I would probably aim it a little bit higher, probably say like 175. But 164 definitely is a pretty low target price. I think it'll stay somewhere between here, 207 and 164 for the soon future until Apple really gets into the AI market. I think Apple can really, make a large impact, but I think they're kind of on the sidelines watching to see how AI plays out, to see how they can implement it into their products. Now, that seems to be the Apple strategy for a lot of things as well. They kind of stayed out of the VR section where Meta kind of took over. Mark Zuckerberg was talking about the VR and the metaverse for a long time, even changed the company's name from Facebook to Meta. And then kind of the buzz kind of died off on that. They bought Oculus, and they were selling that device. And then Apple kind of came out with their VR headset. Don't really know sales numbers on that, but there were a lot of people talking about it when it came out. and then kind of focusing on their M1 and M2 chips that they have embedded in their new products. I think that's going to be um, a good market mover for them as well, continuing to increase um, the production of their chips and increasing the speed and capacity for memory and efficiency of those chips. So Apple's going to be on my radar to see if there are going to be any inklings of them jumping into this AI race, since the Nvidia buzz is kind of over. Elon Musk has kind of thrown his 2 cents in with XAI. I wonder how Apple is going to posture to move into this AI space, since it is so popular, and I think it could be profitable for them as well. Next, we're going to talk about AMD. So AMD being competitor with Nvidia. I think AMD is bearish at the current moment at 165.14 at the time of recording this. Um, they're below their MA10, 20, and 30. MA10 is at 165.92. MA20 is at 168.04, and MA30 is at 168.42. And so they're bearish at the current moment. I think that's because a lot of people may have sold out of AMD and jumped onto Nvidia, but AMD is still a company. They're still releasing products. People still buy their products. There are people who prefer AMD over Nvidia, especially in the gaming world, especially for PC builds and things of that nature. There are diehard AMD fans, so everyone hasn't switched over to NVIDIA. And as far as gaming is concerned, AMD may be the move, since those products may be a little bit cheaper, since the corporate entities are getting into NVIDIA and driving the prices of those GPUs and things of that nature up, making it harder for people to get GPUs for a decent price. So Wall Street targets this at 265 for an high, 192.56 for average price, and 140 for its low price. So it's kind of in the middle between average and low. Trading sideways, going to be looking to see if this one can rise back up and retest this moving average uh, 10, which is at 165.92, being at 165.14. Going to be looking to see if it can break through the 168.42 level, then going to see if it can test 175.55. Now, I think the only way it can do that is if some significant news comes out about the company on how they're going to be jumping into the AI race or new products that are coming out for them. But other than that, I think this one may continue to trade sideways between the range of 174.55 and 158.28. All right, so those are all the stocks. That's what I'm going to be watching this week. Make sure you drop a comment down below. Tell me what stocks you guys are watching this week. Make sure you check that inflation report. It's going to be on Friday for PCE. Definitely going to be a good indicator for the market to see how inflation is going to be working. I don't think that rate cuts are going to be coming anytime soon, especially if there's a good PCE. Um, I think they're still going to have to wait, and Fed Chair Jerome Powell is going to be waiting um, for the AOK to announce those rate cuts. But bear in mind, once that happens, you will see a boom in the market. So if you're one of those people who day trade SPY or is an options play person on SPY, make sure you keep an eye on all the Fed announcements that come out. And make sure you look at all these different indicators that are in the market. The ones that I use are moving average 10, 20, and 30. There are other ones out there such as Fibonacci, or you can do different increments of the moving average. Some people do just 10, 20. I've seen 50 and even 100, but 10, 20, and 30 are the ones that I use. Um, so good luck to everybody out there trading, and I'll see you guys on the next one. Peace.